What would happen? If tomorrow all banks suddenly closed? Imagine waking up one morning and hearing that all banks have stopped operating. You pick up your phone to check your balance, but the banking app won't open at all. The ATM near your house has a sign saying it's out of service. Stores are still open, but no one accepts your card. Gas stations only accept cash. Rent is due. But landlords no longer accept transfers. At first, you think it's just a temporary glitch, a minor technical error that will be fixed. But when you step outside, you notice an unusual atmosphere on the streets. People are lining up in front of bank branches that are closed tight. Supermarkets are packed. Shopping carts filled with goods are paid with crumpled bills because cards are now worthless. On TV, news broadcasts keep reporting that the financial system is under emergency review, and then a thought hits you that sends chills down your spine. Your money isn't where you thought it was. It's not in your account, ready for you to withdraw as you always did. It's just numbers on a screen. And now that screen is dark. It sounds like the opening of a dystopian novel, a story about the apocalypse, but in reality it's not. This has happened before, and not in distant, unfamiliar countries. The instability you never imagined happened right in countries that believed they were modern, safe, and stable. And when it happened, life didn't just pause gently. It broke apart instantly. Overnight, all rules about money and the way people live were overturned. Look at Argentina in 2001. After years of poor management, mounting debt, and constant reliance on IMF bailouts, the government fell into desperation. Banks lost all deposits as people rushed to convert pesos into dollars and move them abroad. The government then decided to shut all doors. They called this measure corralito, meaning small corral. But for ordinary Argentinians, it was nothing short of a cage. They were allowed to withdraw a maximum of 250 pesos per week, no matter how much they had in their accounts. Dollar accounts were forcibly converted to pesos, losing value within weeks. Savings for homes, businesses, or retirement suddenly lost half their real value. People were outraged and took to the streets, banging pots and pans in protest. Middle-class families, who thought they were safe and stable, were thrown into chaos overnight. That is what happens when banks close. Money doesn't disappear in an abstract sense. It disappears in a way that makes bread, milk, or rent suddenly unaffordable. And Argentina is not the only case. In 2013, Cyprus, the European Union, forced the government to freeze all bank deposits as part of a bailout deal. People woke up to find accounts, over 100,000 euros, were being confiscated to save banks on the brink of collapse. The hardest hit were not the billionaires, but businesses suddenly unable to pay their employees. Pensioners couldn't access their pensions, and parents could no longer afford tuition for their children. In Lebanon in 2019, years of corruption and fiscal crisis led to the implementation of capital controls. Banks limited withdrawals to just a few $100s per month, regardless of how much you actually had in your account. People grew so angry that they stormed the branches, not with paperwork, but with guns in their hands. And in all of these stories, the lesson is the same. What you think is your money actually belongs to them. Even in the United States, where people always believed that such a thing would never happen, banks here have also shut down before. In 1933, during the depths of the Great Depression, President Franklin Roosevelt declared a nationwide bank holiday. Across the country, for 4 consecutive days, every bank across America shut its doors. People couldn't withdraw cash, businesses couldn't pay wages, and uncertainty spread everywhere. Only after the government inspected and selected the banks deemed safe enough to reopen did public confidence gradually return. But think about this. One of the wealthiest countries in the world had to freeze its entire banking system just to stop it from collapsing. The common thread in all of these stories is that banks do not keep your money the way you think they do. Banks operate on a fractional reserve system, meaning that for every dollar you deposit, only a tiny portion is kept in the vault. The rest is loaned out, invested, or turned into debts. When too many people simultaneously want cash, that illusion collapses instantly. And instead of admitting the system's fragility, governments usually side with the banks. They freeze withdrawals, devalue deposits, and make you pay for the system's mistakes. Now imagine that happening tomorrow, right in the city where you live. What would you do? Do you have enough cash for a week or a month? Could you pay rent? If the bank itself is the cause of the crisis, can you feed your family? If those digital numbers suddenly vanish, this is not exaggeration or paranoia. but confronting a difficult truth that the financial system was not designed to protect you, but to protect itself. And when crises hit, you will realize banks are not sturdy safes, but fragile machines powered by trust. Once that trust breaks, money and power will flow in directions you cannot control. That is the truly frightening scenario. And as we've seen from Argentina, to Cyprus, from Lebanon to even the United States, this is not a hypothesis but historical fact. And history has a terrible habit of repeating itself. When peeling back the layers of these crises, a familiar pattern appears painfully clearly. Banks do not collapse by accident. They collapse because of how they were built in the first place. The fractional reserve system, the core foundation of modern finance, is both its genius and its fatal flaw. Put simply, banks do not hold your deposits intact, like a coat in a cloakroom. They take that money and use it to multiply many times over. If you deposit $1,000, the bank may keep only $50 as reserves and lend out the entire remainder to businesses, homebuyers, or even the government. That loan then becomes someone else's deposit and is loaned out yet again. From nothing, your original $1,000 can become $5,000 or even $10,000, circulating as credit in the economy. That is the engine that drives growth. But at the same time, it's also like a house made of cards, because if too many people come to claim their initial $1,000 at once, the bank won't have enough money to pay. That's why trust is everything. This system only works when people believe. The bank's doors will always stay open, but the moment that trust wavers, a bank run will immediately occur. Not everyone has to demand their money, just enough people to expose the thin layer of reserves underneath. And once panic spreads, even banks that seem healthy can still collapse. It's like a crowded theater suddenly catching fire. All it takes is one scream. A group of people rushes to the exit, and immediately the entire crowd tramples each other to survive. Governments understand this very well. Therefore, through crisis after crisis, their instinct is not to protect depositors, but to protect the banks. When Argentina applied the Corralito measure, it wasn't because they wanted to harm the people, but because allowing everyone to keep withdrawing would collapse the banking system in a single week. And in Cyprus, when the government executed the bail-in, meaning money was taken directly from depositors' accounts to recapitalize the system, this measure was explained as a bitter pill that had to be swallowed. But the truth was brutally harsh, because ordinary citizens were the ones forced to bear the consequences and pay for the mistakes of politicians, bankers, and international creditors. In the United States in 1933, Roosevelt wasn't merely reassuring the public. He was buying time to stop a chain of consecutive collapses. The truth is, banks and governments are tightly bound together, like two inseparable parts. Banks need governments to maintain public confidence, guarantee deposits, and provide bailouts when crises occur. In return, governments need banks to buy bonds, finance deficits, and pump credit into the economy. When pressure strikes, they immediately protect each other. And the one left abandoned is you, the depositor. The taxpayer, the person who is told they own their money. That illusion is reinforced by regulations and deposit insurance programs, which seem like they were created to protect you. In the US, the FDIC insures accounts up to $250,000. But ask yourself, if every depositor nationwide claimed that insurance at the same time, would that money actually exist? The answer is no. The insurance fund is only a tiny fraction of total deposits. Its true power lies in psychology. It's like a dose of sedative to keep you calm. And when banks close, what happens? Businesses come to a halt. Electronic payments disappear, salaries are delayed, and supply chains begin to jam. In Lebanon, factories could not import materials because they couldn't transfer dollars abroad. And in Greece, during the 2000 crisis, people had to line up under burning heat at ATMs, waiting for hours just to withdraw €60 per day. Weddings were postponed, surgeries delayed. Children had to skip school, all because the financial system suddenly declared that access to your own money was no longer a right, but a privilege rationed at their discretion. Even in the era of smartphones, cryptocurrencies, and fintech apps, this problem hasn't vanished. It has only grown more severe. The digitization of money, making us more dependent on banks and centralized systems than ever before. If the servers crash, if the card scanners stop working, or if a financial institution suddenly shuts down your account, then your entire assets instantly become nothing but floating numbers, meaningless in the void. In a cashless society, the idea of banks shutting down is no longer a distant fear from the Depression era, but it's a modern nightmare waiting to happen. Now think about the domino effects. Businesses unable to pay employees, leading to mass layoffs. Supermarkets unable to pay suppliers, causing shelves to empty out. Investors panicking, rushing to sell off assets at rock-bottom prices, draining pension funds and retirement savings to the bone. Governments scrambling to restore confidence. But with every passing day, the lines grow longer and people's patience burns thinner. What began as a single, technical decision in a boardroom turns into a full-blown social crisis. And the longer it lasts, the more desperate people become. From bartering and hoarding to full-scale riots. This isn't hypothetical. It has happened in many countries around the world. And it can absolutely happen again. If you think it could never happen in the US, the UK or Germany, remember, that's exactly what people in Argentina said. In the year 2000, what the people of Greece said in 2000, and what the people of Lebanon said in 2009. Stability is only an illusion until the day it disappears. The hard truth is, banks do not exist to protect your money, but to protect themselves and the system they serve. And when pressure hits, they will sacrifice you to survive. The system was built exactly this way, and pretending otherwise is the most dangerous illusion of all. Now imagine waking up tomorrow and seeing your bank's website crash, your debit card declined, and your paycheck delayed indefinitely. Now imagine it lasting not just 1 or 2 days, but longer. What would happen if the shutdown dragged on for weeks? Do you have enough cash for food, for property taxes and bills? And could your company pay you? If the entire payroll system froze, this is where the line between fiction and frightening reality begins to blur. Because banks aren't neutral safes of steel, they're the arteries of the economy. And once they are cut off, everything behind them slowly dies. The lessons from past crises are not meant to gather dust in books, but to serve as clear warnings. When Argentina shut down its banks in 2001, the outrage on the streets wasn't just about money, but about the feeling of betrayal. Ordinary people felt like hostages to a system they could no longer trust. In Cyprus in 2010, middle-class families saw decades of hard work evaporate overnight to save institutions deemed too big to fail. In Lebanon, the collapse shattered the very concept of citizenship as people realized their leaders had gambled away the nation's future. And in the US, the Great Depression left a deep scar that shaped a lifetime of cautious saving for an entire generation. The thread connecting all these stories is a harsh but undeniable truth. Your money is truly yours, only until the system decides otherwise. The numbers on your banking app may look safe, but that's only true until the moment it isn't safe anymore. And that is exactly why today's lesson becomes extremely important. In a world witnessing record levels of public debt, fragile global supply chains, and rising geopolitical tensions, bank holidays or capital controls are no longer far-fetched. They're tools readily available in the state's arsenal. So is there anything you can do? The answer is not panic withdrawing your money or stuffing cash under your mattress. History shows that fear-based reactions only make you more vulnerable. The right strategy is resilience and adaptability. Diversification isn't a slogan. It's a survival method. Owning assets in multiple forms, across different institutions, even across different countries, can make the difference between total paralysis and being able to maneuver. Real wealth is not just what you earn, but what you can actually use when a crisis hits. Gold, real estate, alternative assets, or even emergency cash reserves are not outdated ideas. They're genuine lifelines. And beyond personal decisions, there is the community factor. We must understand how laws are created. Time and time again, governments design financial protections that seem to protect the public, but in reality are built to shield the system itself. Deposit insurance, emergency powers, capital controls, they're all measures created to manage panic, not to prevent collapse. If we don't understand this, we'll become dangerously complacent. But if we do understand, we can apply pressure to demand better rules, greater transparency, and clearer accountability in a system that history has repeatedly shown will always prioritize itself before thinking of us. The most haunting part of all this is how fragile trust truly is. Banks don't need to collapse physically. They just need people to stop trusting them, and the entire system begins to shake. The moment that trust cracks, the countdown begins. And when the bank closure order is issued, the mask instantly falls, revealing the truth that banks were never neutral institutions or mere service providers. They are power structures, deeply intertwined with governments, corporations, and global markets. You are not a customer. You are a cog in a system that runs smoothly until the day it no longer does. History doesn't repeat in exact detail, but its echoes are loud. The lessons from Argentina, Cyprus, Lebanon, Greece, and even the United States are clear. Don't confuse access with ownership. If your assets only exist with the permission of institutions, they were never truly yours. To build financial freedom, you must break the illusion of safety and prepare for the moments when the system starts to wobble. Because one day, the question you face won't be, what if the banks close tomorrow? But what do I do now when it has already happened? For real. The real lesson is financial stability is not something you wait for the government or the banks to deliver. It's something you have to build for yourself long before a crisis happens. A system can collapse in an instant. But preparation always requires accumulated time. Start by building a safety buffer. Outside the banking system, a bit of cash, a little gold, and a backup banking option will become a protective net, helping you avoid panic when the unexpected hits. Most people overlook preparation simply because nothing bad has happened yet. But it is precisely that illusion of safety that makes society fragile. What protects you is not hope, but the system you build. Not luck, but the foresight you cultivate. Take an honest look at your own financial habits. With full honesty, notice where you are relying too heavily on digital systems, where a single small glitch could paralyze your entire life. 4. Reducing dependency is not an act of fear, but a sign of intelligence. Understand clearly the difference between cash and wealth. Cash is what you use to spend, but wealth is what protects you during hardship. A skill, a tool, relationships, and assets that exist outside formal institutions are the true foundation of real security. 4. Never underestimate the power of community in every recorded crisis. The best survivors are not the strongest, but the most connected. Build relationships, because resilience always comes from connection, not isolation. Create a simple plan for financial emergencies. Know exactly how much money you need each week, where your backup funds are stored, and how to access them. If digital systems go down, clarity eliminates panic. Train yourself to notice emerging signs of small economic warnings. Transfers slowing down, strange promotional offers from banks, or recurring system glitches. These are not random. They are signals for those who pay attention. Always allocate part of your income to assets that banks cannot freeze. Even as a small habit, consistently maintained over years, it will transform your financial trajectory. Safety is built from small decisions repeated consistently. Remember that in every financial crisis throughout history, those who suffer the most are not the vigilant, but the complacent. The world never rewards the denial of reality. It rewards clarity, preparation, and the courage to act before others even notice. If this message brings you clarity or strength, leave a comment below so I can hear your voice, your story, and your personal journey. And if you want to watch more videos that expand your thinking and protect yourself in a world full of turbulence, don't forget to like and subscribe to Knowledge Station. Your support helps these truths reach those who need them most.